Good morning. Let me know if my audio is good, the picture is good. If you can just type 1 in the chat, I'd appreciate it. Fantastic. So just give it a second, read the disclaimer, and let a few more people kind of pour in here, and then I'll get to it. We have about 15 minutes till the open, so there's no rush. I'm aware, Hassan. I'm just letting the disclaimer left on the screen for a second. Bruno, probably till the end of the silver bullet hour. So about an hour and a half or so. We'll just see. I mean, each day is going to be different depending on price and what it's doing. If I don't see anything fruitful, I'm not going to sit on here and waste each other's time. I'd rather be productive. So today seems pretty fruitful from the looks of it. We'll have to see with the open. Just give it a few more minutes. I want more people to kind of come into the stream, read the disclaimer. If everybody can like the video as well, it'll kind of boost the algorithm. How many trades do you usually take each week? It just depends on the week. Typically, I'm only taking 2 to 3 trades a week. Just depends on the week and the profile. All right, so it looks like the stream is good. For those of you who were on the live stream on Saturday, I was having some connection issues, but I actually went and bought a router, so hopefully the connection is a bit better today. I have to keep an eye on it. Do I trade Forex? Yes, I primarily traded Forex for about 3 years. I would say almost 4. I'm very versed in Forex. Looks like we got about 41 viewers, so I want to get to 50 and then I'll probably start it. And if you're watching the market, don't have any fear of missing out or any emotions before the open. It's a Monday, CPI this week, very low economic news driver events start off the week, so my expectations are not extremely high to start this week. I could do both, Bruno. I don't typically hold for. I'm more or less intraday. If you've been following along, I don't hold over days. Like typically, I'm in and out within a session. But let me know if I transition here, if you can see my charts and if everything is clear. I'm going to try to keep an eye on the stream and make sure it's healthy. Let's type a 1 if you can see the charts, if it's clear. Audio is coming through good. All right, thank you. All right, well, let's start off today. Now let's take a look at, thank you. Let's take a look at everything. Currently, you can see prices moving, and I don't have any fear of missing out. When you have rules and discipline, when you stick to a time zone, everything else doesn't matter to me. Which I'm primarily, these streams, I want to really get the point of the silver bullet and teaching from that perspective. It doesn't mean that I can't take a trade outside of that, meaning like after the open. But typically I want to stay in that time zone, in that box, so we can all kind of look for the same thing and I can teach from that perspective. Regardless if I was teaching or not, primarily that's what I'm trading. So let's start off with the daily time frame. If you watch the weekly forecast, I'm looking for higher prices overall. So I explained last night with dollar index, the ES, YM, and Q, there's a bullish SMT. There's relative equal highs resting above us. So I'm leaning into the week with a bullish bias. And looking at the daily time frame, there is a discount fair value gap resting here. So we dipped into that on Friday, and then today you can see an expansion away from it. Looking at the 4-hour chart, I really like the buy side liquidity here. I think that's a really, really good target, at least going into the week. I don't know if we're going to tag that today. I'm a little iffy, to be honest with you, because we don't have economic news driver events this week until CPI. So it may be a seek and destroy type of profile up until then. There's no guarantees. We'll have to kind of play it out. You can see on the 4-hour chart, we've came down into this, which is a rejection block, just kind of the open of this candle. Going down into the 1-hour, if you observe, I'm not going to have this up. I have 4 monitors just to give you a perspective, but to my right I have an SMT layout. So if you're looking at your SMT kind of layout, if you have that, observe YM and observe ES and NQ and the relative lows, because in here ES and NQ have made both higher lows and YM made a lower low. So that's a bullish SMT. It's a crack in the correlation. So going into today's session, I'm looking for higher prices. If we dig down into a 15-minute chart on an NQ, you're going to see that we took out sell side liquidity overnight, and then we displaced higher. So we have sell stops being ran, displacement higher, shifting above an old SIBI, leaving a BISI here. So that becomes a balanced price range. Price dips down into that, and then we trade away from it. Come back down into this bullish order block here. Trade away from it. This gray box or line is the new day opening gap. The neon green is the new week opening gap. So both of those are very important, at least today. And this last up close candle is our bullish breaker. So we have a low, a high, a lower low, and a higher high. So that's our bullish breaker. Price trades into that. Coupled within that bullish breaker is the new day opening gap with the fair value gap here. And you see pre-market, we trade away from it, come back down into a bullish order block here with the new week opening gap. And then we trade away from it tagging, there's relative equal highs resting here. So we're about to tag that. That's what I'm assuming we're going to do right at the open. We're going to tag that. We're going to trade up into the premium 15-minute SIBI here. Now, I'm going to have to keep an eye on higher time frames and see if we're really going to expand into the relative equal highs resting up here. I'm going to have to see if there's enough juice or enough squeeze today to get up into there. The reason I'm saying that is because, again, there's no economic news driver events. We're on CPI this week. We're still in January, so there's a lot of things where it could look pre-open where it looks really appetizing. It looks like, you could tag a certain buy side or sell side liquidity pool, and it turns into a seek and destroy day or consolidation. Those days are harder to predict and are harder to see coming, especially for a newer student, because you obviously don't have enough experience. You don't have enough chart time. You can't see that. So for me, I'm just being aware of that. I'm being understanding that we're on a Monday. I'm not trying to get, tripped up in the beginning of the week. Let's dig into, I'm going to take this away. And when I'm on the stream, I'm going to have a 5-minute / a 1-minute and a 15-minute open. So it's going to look like this. So I'm going to dig down into a 5-minute here. So I have a 5-minute chart and a 15-minute chart. You can see here, same thing I just explained. We're about to tag the buy side liquidity pool. But looking at the 5-minute time frame, you can see we dip down into small fair value gap here. Trade away from it, shift to market structure, comes back down into fair value gap there with the new week opening gap. We trade away from it, come back down into it, bullish order block, mean threshold, trades away from it, and we're about to tag that buy side liquidity pool. So we have about 5 minutes until the open. I'd probably watch a few things here. So I'm not saying if I highlight something, please, let me put this in a nice way. If I highlight a fair value gap or I highlight a certain area, please don't take that as a signal. Please don't take that as a potential, long or short. If I'm going to enter into the market, I'm going to tell you. So again, I'm not trying to make this a signal type of live stream. I'm making it an educational live stream. I want it to be as clear as possible that I want you learning how to trade rather than just taking signals and just asking, are we long, are we short, which way is it going today? If you're in it for that, then just leave the live stream, because this is purely educational. The same thing ICT did last year for 2023, as he walked us through every single day on a live stream, just tape reading. I think he only took maybe one trade live. And that whole year, even for a charter member like myself, was extremely eye-opening to me, because I got to really learn these lower time frames. I got to learn how he functions in a live condition. So that's really the end goal, is for all of you to gain experience through me, somebody who's been doing this for a long time. If I can lend that experience and that foresight to you, that's really what the end goal is. So looking at the 5-minute time frame, we're about 3 minutes out from the open. Just observe this fair value gap here on a 5-minute time frame. Observe this and see, when we open, do we dip down into that, and do we expand away to attack the buy side liquidity? We may attack it before it. I don't particularly obviously know, but that's just something I'm going to be looking at going into the open. Let me look at the stream, make sure everything's good. Chat. Let me look at. What charter year were you? I was 2021. So it was the last year that he did his charter membership. And I was well aware of ICT. I was learning its concepts through YouTube and other leaked things. I mean, everybody was, sharing these these videos way before he got super popular. Good morning, Danny. Good to see you in here. Good morning. Good morning. Looks like we're at 86 viewers or something like that. If we can get to 100, I would love that. Good to see you, Neil. About a minute away from the open. So the fact that on the 15-minute time frame as well, we closed above this SIBI, so it's going to act as an inversion level. If you notice my boxes and the color coordinations, anything blue is bullish, anything red is bearish, PD raise, and if I turn it orange, that means it's an inversion level. You can see here we tagged the buy-side liquidity pool there. So do I feel any type of emotion like, man, I should have been in this, I should have captured it? No, because I understand my rule set and I understand statistics and data. If I just wait for my time and the model to appear, I'm going to be profitable. So I never have a fear of missing out. And that just comes with time and data and understanding your model. So primarily, what I'm going to be looking for and trying to teach is this silver bullet window. So yes, I'm in Central Time. It's going to be 9 o'clock in the morning till 10 o'clock. So right here, the silver bullet, I'm sure everybody's aware of what that is. That little pocket of time, that's what I'm going to be looking for. So this is the open. I want to see from here, do we want to trade up into this premium SIBI there? And then we have a premium 5-minute SIBI resting above price as well. And if I'm not talking at one point, it probably means I'm just trying to concentrate and just analyze the market. So if you don't hear me talking, it doesn't mean, obviously anything's cut off. I'm just trying to concentrate. Good morning, everybody. Good to see that, Kayla. Or Neil, I'm sorry. If you take a look at the dollar index as well, I want to see that drop lower today. So you can see we're really expanding from the open. And this is all pre-open. As I discussed, it was pretty much primed and ready to do that before the open. If I see that we really want to expand towards this buy-side liquidity pool before, I guess, the silver bullet, that is something that I would consider. And if you see me shuffling between like a 1 hour, 4 hour daily, and then going back to a 15-minute, it's just how I chart. I like to scan all the time frames, make sure I know exactly where I'm at, rather than me being, tunnel visioned on just a 1 minute or just a 5-minute or just a 15-minute. Making sure you're going through these time frames and seeing where you're at is really key. If you're looking at the daily time frame here, we have a premium, or at least a SIBI resting above price, right above that buy-side liquidity pool. You can see we just came down into the equilibrium of this wick here. So wicks will act as gaps. Traded down into that last night, and you can see the expansion away from it today. Let's go back down into a 1 hour real quick. If you're observing YM or Dow, it's not really joining the party per se with ES and NQ. So it's a little decoupled, meaning that it's not in sync with the other two. So if you ever see that where you don't have market symmetry, you don't have things moving in tangent with each other, it's not the best sign in the world. I mean, it could just be a little bit behind it in terms of time. It could catch up with the others. So I want to see, does it want to join ES and NQ, and then can dollar continue to rip off lower? So we've met the premium CIBI here and the 15-minute as well. So since we're expanding fairly quickly in here, I'd like to go down into a 1 minute, which I do have open on another monitor. It's still left of me. So if you don't see me going down to 1 minute, it's probably because I have it open on another monitor. So in here we have this fair value gap. Ideally, that's probably the point of interest I'd be looking at, to be honest. But again, I'm going to focus on the silver bullet when it comes to these live streams, just to teach from that perspective and be, I guess, transparent. But if I was looking at this market, I would be looking for this to hold price in order to go higher. And what I'll do as well is I will scan through 1, 2, 3, 4, and 5 as well. I'm not sure what you mean, Joe. Make sure the stream is still good. Looks like it is. Just an FYI, if I enter into a trade, I'm going to do my best to enter off of paper trading as well, but I'm with my funded futures, so I'm using a platform called Quantower, which is not on the screen. So if I enter in on there, I'll do my best to try to enter in on paper trading as well, but if not, I'll just show the Quantower and show you kind of the executions and where that's at. But if I can do it fast enough, I'll try to get on paper trading as well. So you can see that Dow is starting to kind of wake up here and kind of join the party with NASDAQ and ES. So we have, let's just start with a 3 minute. We have a 3 minute fair value gap there. We have a 2 minute here. We have a 1 minute. So ideally, this is the point of interest I'd be looking at, to be honest with you. I'd be looking for an IOFED into that and then expand away from it. But may not get that. You may just expand higher, right? It looks like NASDAQ is the strongest out of the three currently. Yes, it does move inversely to NQ. So when you see me covering dollar index or even a weekly forecast and looking at those higher time frames, that's, you know, it's supporting the idea of higher prices in NQ. So pay close attention to YM. Because it's completely decoupled away from NQ and ES. It's not a great sign, as I mentioned before. I really want that to be in sync with the other two. And decoupled means, it's just not doing the same as the other two if you're kind of newer. I don't know, I'm pretty sure I can play music without you guys hearing it. So that's probably what I'm going to do. No, it doesn't, Joe. So we'll just have to see. Ideally, I would have liked this fair value gap, but looks like we're just expanding a little bit too quickly away from it, which is fine. So we've closed above. Let's go back out to a 5-minute here. We've closed above this premium SIBI, which will now act as a inversion level. So I will now change that to orange. Same thing about in 4 minutes on the 15-minute chart. We'll change that as well. So the fact that we've gotten above that inversion, or that SIBI that's now an inversion, I wouldn't be looking for this fair value gap anymore. I'd just be looking for something above the inversion to act as support in order to attack the buy-side liquidity pool there. Dow's just not wanting to join the party with ES and Y and Q, so it's pretty interesting to see. I'm just going to stick on a 5-minute here. You would like music as well. I can see what I can do. I just don't want it to be too much of a distraction, I guess. Typically I'm listening to like lo-fi or just something very chill. I don't have like words, if that makes sense, when I'm listening to songs while I'm trading. So typically after prices expanded a lot, I'm going to scan through the time frames again, make sure where I'm at. At this point in time, obviously I'm really confident that it's going to tag the buy-side liquidity pool. It seems very clear to me it's going to do that. But after we do that, that's going to be a different discussion. Do we continue higher, or is that simply a raid on buy-side liquidity? I'd be confident in a large expansion today if YM was really following suit, but it's doing the complete opposite. If you look at the 1-minute time frame, there's a fair value gap here. At this point in time, I mean, you could utilize this fair value gap to send it to the buy side. But the issue I have is Dow's really not joining the party. So I'm a little iffy. As I said, I want to really pay attention to the silver bullet. So remember, I still have about 15 minutes or so. And if I miss moves pre-silver bullet, I don't care. It's not part of my rules. Good morning, Jazz. Bruno. Yeah, I guess. I'm not very much somebody to listen to, like, music with a lot of energy, I guess, in the morning when I'm trading. So if you observe, I don't have to keep talking about this, but really look at what Dow is doing. Looking for selling a premium FFG in the silver bullet window. I mean, we've kind of passed up all the premium fair value gaps, so you can see here this fair value gap held. We're attacking buy side liquidity. So we traded up beautifully into the relative equal highs there. Do I feel any type of way that, man, I should have gotten into this trade, I should have taken it? No, I don't. So what I'm doing now is, since I've met my kind of drawn liquidity, I'm going to scan back out into a higher time frame and try to give me a point of view, a perspective as to what price is really doing. So we're going into that daily fair value gap here, which it may lend support to move off lower. The reason that I'm really concerned with what we're going to do with the rest of the day is Dow, because if Dow was really with the party and it was in sync, I would have been a lot more keen to take a long there. So I'm just going to have to observe what YM's doing. NQ is the strongest out of the three. So if I was looking at price and where we could potentially head next, any of these old highs would be the next drawn liquidity for us. These were just the clearest, obvious highs that we had. So any of these old highs in here would be the next kind of drawn liquidity for price. I'm curious to see if that was simply a run on buy side liquidity. I don't see reason for price to drop lower. Just because you have a run on buy side or sell side liquidity does not mean that it's going to automatically reverse. Again, narrative is very important, paying attention to what the higher time frame, parent time frame is doing, what's intermarket relationships looking like, what's the SMT between them. All those things are huge factors that you need to be paying attention to in real time, which I continuously keep talking about in basically every single video. So I want to see in how we really close from here on the 15-minute, 30-minute. Because if this turns into a wick with a huge down close candle, it's going to be a little slightly concerning, I guess. But you see how we closed above this premium SIBI? That's going to turn into a inversion for value gap. So let's put it there. I'm going to take a couple annotations away. But going off the idea, let's play devil's advocate of we've taken out buy side liquidity. In order for me to look at something, like if we take out buy side liquidity, it doesn't mean that we're going to drop lower. There needs to be some type of drawn liquidity, a narrative paired with it. I just don't see that. There's nothing below us that I could use as a drawn liquidity. We've already taken out sell side liquidity twice now. You can see on Friday, took out sell side liquidity, displaced higher, and then overnight we took out sell side again. So anybody that has sell side liquidity or had sell stops resting underneath it was triggered. All that's cleaned up, so I don't see a particular reason to just attack buy side to drop lower again. It doesn't make much sense. We have a fair value gap here on the 1 minute. Does not mean I'm entering off of it. Please, as I know how people are, if I mark something up or annotate it, please don't take that as something I'm entering off of. I will tell you if I'm entering into the market. It's like the clearest way I could put this. I don't want to receive DMs and messages that you made me lose a position, you made me lose my funded account. I'm not responsible for any of that. Looks like the stream is still healthy, so that's good. The reason why I like the silver bullet window a lot, there is pros and cons to everything. There's pros and cons to every single model, and you can't trade everything. You can't have every single model. So you have to just take it. I don't know if you hear those Telegram notifications or not. I may have to turn that off. Funny enough, that's actually ICT. But any model that you have is going to have pros and cons to it. You're never going to be perfect. You're going to miss moves. You're going to, obviously take losses with them. So you just have to pick and choose what works for you and take the flaws that are with it and stick within those rules and those boundaries. Because somebody that's only trading the silver bullet, is obviously going to be looking at this whole price run, this whole leg up, and be like, man, I missed all of that. But who knows with silver bullet, it could completely reverse, and then you're inside of a higher probability, right? So you just have to take what's best in your model and obviously understand that there's going to be some cons to it. I want to open up Telegram to mute the notifications, but let me actually go on my phone. I'm not sure if you can hear that or not. Yeah, I didn't think you could hear it, but it's distracting to me. Oh, ICT. I know those probably give FOMO to those who are not in charter, but yeah, he's still very active within our private group. Very, very chatty today. So the fact that we've taken out buy side liquidity here and we've reached our kind of terminus, we reached our drawn liquidity, I wouldn't look at this for like as very high probability, I would say, because we've already reached our drawn liquidity. We've reached that terminus. So anytime you reach a terminus or you draw liquidity, sometimes you have to take a step back and look at, does it want to retrace into a larger discount. I talked about this on a live stream, I think Saturday. Anytime you make new highs or you make new lows, it can allow price to move into or retrace into a short-term premium or discount. So the fact that we've made a new high in here, it may allow price to reach into a larger discount. So when I was looking at that 1 minute, it just doesn't seem as high probability because we've reached that terminus, right? But I'm still going to observe it. I'm going to see what happens. Jazz. Yeah, and I'm sure a lot of people do, and you know, I feel guilty talking about it. I really don't want to, obviously rub it into anybody, but I guess that's the perks of, being in the charter membership. He's doing very well, if you've been wondering. He's happiest he's ever been, I guess today he mentioned. Moving away from social media. Look at Dow, man. Dow is completely doing the opposite. It's completely decoupled. And ES is really not wanting to move higher. So this should be like a red light kind of going into the silver bullet. Is if you're observing the crosses here, the fact that Dow's really not wanting to move along with them, it gives me the idea that we may drop lower, or we may do something different. So let's just see what happens. And we've about 5 minutes to it. So we have a small, on the at least the 5 minute time frame, a small fair value gap here. Oh, you see me checking my audio. I have a dog that's in my room. It's a pug, and she's sleeping, so I don't know if you can hear that snoring or not. It's pretty funny. So I really want to see how this 15-minute closes. CJ, what's time in force on the buy/sell contracts menu? I'm not sure what that means. I don't see anything that says that. So I'm just marking up this 2 minute here. Yeah, Ty, sorry, I saw your message. Yeah, I plan on live streaming, I mean, for the most part every day, and just seeing where this takes me. I mean, if I find it a hindrance to my own performance, then I may taper back on them, but I do enjoy doing live streams. Let me see what you mean. Oh, time in force, not trade in force. So that's just Pretty sure that's just based off of the time, right? What time you're looking to enter. So seeing a really, really large expansion today. It's good to see. So we'll mark up any kind of premium targets resting above us. You know, something I forgot to highlight is, let's toggle. So we have the electronic trading hours and then the RTH gap. So we have an RTH gap residing beneath us that's open. So I'm curious to see, I said, how we trade and going into the silver bullet. But let me mark that out actually, just so I remember it. I'll go back to electronic, and then I'll make the box here. It doesn't need to come back, it doesn't need to fill it in. If it's extremely bullish and it wants to just continue higher, then it can leave that open, but just something to notate. And go back out to a 15-minute. It's not there. Alright, so now we're inside of the silver bullet window. So either A, Dow is going to start to pick up and move in tandem with ES and Q, or I may continue off lower. Dollar index looks like it wants to continue lower, which is good if we want to continuously keep seeing higher prices. I'm going to do this real quick just because I want to kind of get a clear view of everything. The fact that we've moved so significantly already today, and I reached my targets, I'm going to start looking at what is kind of the next viable option. What's the best place for price, right? So even looking at like a weekly time frame, like I'll go all the way back out to a weekly just to gain perspective. I'm inside of this BISI in here, expand it away from it. Daily time frame. Yes, we're inside of this civvy in here, but that doesn't mean that I'm automatically looking for shorts. It doesn't mean that it even needs a correction away from it. 4-hour time frame here, 1 hour. So there's nothing super obvious. I would say this high here would be the next kind of draw on liquidity for us. There's a small little imbalance above price right there. And then ultimately these relative equal highs there. So those are kind of the three things I would be looking at if we do continue higher. So you have to make sure, a lot of times my visibility is obviously not correct. I actually should be on the 15-minute, which is good. Looking at this pattern here, there's a low, a high, low, then a higher high. So it's technically a mitigation block in here if I could find a kind of a good point of interest. Like if you look at the 30-minute, this last up close candle, extend that to your right. So what would give me confidence to keep looking for higher prices? If dollar index really starts to move off lower, and Dow wants to move in sync with it, because look at the SMT between Dow, ES, and NQ. NQ's made a higher high, ES hasn't, and NQ hasn't, and YM's not even near it. So you have to pay attention to that. That's a bearish SMT. Does it mean that it's automatically bearish? No, but it's typically not a great sign. It's not something I want to see. I'm going out to a 5-minute here. So this, let me make this blue so we can all see it. That line there would be the next draw on liquidity. That premium SIBI I marked up on the 1 hour, and then the buy side liquidity pool up there. So we have a breakaway gap, 2 breakaway gaps underneath it. I'm not going to annotate it, but make sure the stream's still good. Looks like it is. 120 viewers. It's good. Welcome everybody. For those who are new, haven't been here before, appreciate all you. So let's play the sick sister approach. So looking at, let's say, ES, if one is lagging in terms of like behind where the other one is, so you see how ES hasn't reached up into its relative equal highs as NQ has. If you're confident that it should continue higher, then you could look at ES and you could position yourself into ES rather than NQ, because NQ's already reached its drawn liquidity, but ES hasn't. So if you wanted to position yourself, you could position yourself into ES rather than NQ, right? But primarily I'm only trading one asset. I don't like to kind of dabble back and forth. I understand the approach, but I've gotten tripped up too much like that, so I would rather just stick to NQ, and if I miss something, it just is what it is. I'm not going to make a big deal out of it. Already positioned from 47.50. Fantastic. Yeah, I think ES relative equal highs at 47.66.5 is it's a good draw on liquidity for it. What made me switch back to indices? I know you were trading currencies back in the fall. Just simply due to convenience. I mean, I've traded currencies for probably 4 years up until I switched to indices. Just depends what price action is really looking like. If I don't find indices favorable, if they're inside of consolidation, or I don't find it favorable, then I can go back to currencies, which you can still trade the, let's say you're trading euro, you can still trade the euro contract, which is 6E. So if I want to trade that, I can just trade it on my futures account. So we have a fair value gap here. What I would prefer is if the 15-minute closes and that creates a fair value gap, and we dip down into that to expand higher. Yes, Daniel, it's all you need. everything on ICT's YouTube channel that was made for simplistic, like I guess reasons, 2022 model, silver bullet, one trading setup for life. I mean, those are the few things that you need. You don't need more than that. Um, if you can find one silver bullet a week, I mean, hey, if you can do that twice in a month, 3 times in a month, depending on your account size, I mean, you can make so much money with it. You don't need to be inside of these markets every single day, you know, trading every single price leg. There's no need for that. Anybody that's advocating for you to be taking more than 2 trades in a day, to me, it just doesn't make any sense logically. I don't know why you would want to do that to yourself. Like, after a while, as much as I love this, I want to have life. I want to have time freedom. I don't want to be glued to these screens. I don't want to be a prisoner to these charts, because I have been. I've sat on these charts for 10, 12 hours in a day, and after you feel exhausted, you feel awful. There's no reason for it. You don't need to be doing that. You trade for 1 hour in one day, one session, on one asset class, and that's all you need. How many points are 10 handles? Points and handles are the same. Let's look at a 1 minute time frame in here. So there's a fair value gap there. Bruno, typically about 50 to 100 on NQ, which, I mean, on ES it's about 10 to 20 handles. So you can see we dip down into there. Really what I'm waiting for is the 15-minute to close to kind of give me a little bit more information. What's up with the live stream with UNC? I don't know what that means. How can I calculate my risk on MetaTrader 5 if I want to trade US 500? The best thing to do is to set limits, and then you can modify your stop loss and take profit, and modify your lot size and see what risk works best for you. It's typically what I do on MetaTrader, or I did. Hey, Khalif, good to see you, brother. I haven't heard from you in a long time. Happy New Year to you as well. Pipsy Hustle, Finesse, that's my boy. Grant's a great dude, despite what, some people say. Thank you, Danny. Danny is also a fellow charter member, so give him a follow on Twitter. He's probably got better advice than 90% of everybody else on Twitter. Emmanuel, yes I do. You've been great in supporting me. I appreciate you. What's up with the live stream with them? I haven't figured out any details. I kind of wanted to do a first week of live streaming, getting comfortable with everything, and then I'll shoot him a DM. I'm sure we'll figure something out. Good to hear, my man. Dav, Gordon, appreciate you. So what am I observing here? What am I doing? You see I'm not really doing much. I'm waiting for this 15-minute to close. We have about 30 seconds left. Because what I'm doing is, in my mind, if we create a fair value gap here, I'm going to kind of determine if price dips into that. Do we want to expand away from that and move higher today? I really would like Dow to kind of move in sync, which it really is being very stagnant. And if you're looking at the 1 minute time frame, if I go back to that, why am I not entering off of this? Why am I not utilizing this? It's due to that 15-minute time frame and due to the fact that we've gotten above the buy side liquidity in here. We've made a new high, so I don't find that as high probability. If we didn't reach up into the buy side liquidity pool just yet, then that would have been, something I would have been looking at. But the fact that we've reached my target, we've reached the buy side liquidity, made a new high. Dow's still not in sync. I'm not looking at that. And the fact that now we have a 15-minute time frame, fair value gap resting underneath, basically this fair value gap, that's the parent fair value gap. So I would much rather elect to wait to see, do we drop underneath this fair value gap and return into this one in here. Like I said, if this moves away and trades away from it, then I don't care. I'm not going to be upset. I was following rules and things that have been set out, for me already through time and experience. And kind of to make note, if I'm saying something and you don't, like let's say an entry, if you find something and I'm not saying anything, obviously trade your model, trade what you see. I'm just here to kind of lend support. In all reality, you shouldn't be trading at all watching these live streams. It should just be for a learning experience and kind of journaling. So I talked about this concept of the silver bullet power of 3, where you're looking at just a singular 1 hour candle, because that's all you're trading inside of, right? So the power of 3 is open, high, low, and close. And if I'm looking at the singular 1 hour silver bullet candle, then I need to be looking at, okay, how did we open? Where is the potential lower high going to be formed? How can I position myself inside of that 1 hour candle? And you're pairing that with your bias, right? So that's why I have the 1 hour candle printed on here. So when I move into the silver bullet, I can look at it. Thoughts on a 90-minute time frame? I mean, a time frame's a time frame. If it works for you, do I use that? No. But don't let me, obviously sway your opinion. But one singular time frame is again, it's just a time frame. You need every single time frame. So look at dollar. Dollar index, if you look at even just a 4-hour chart, we're expanding away from a small fair value gap. Look at the 1 hour, moving away from a premium SIBI in there. So dollar is inverse correlated with index futures. So you want to see that moving away from what your bias is, right? I guess we created a 4-hour order block. I don't see that. I mean, if price traveled all the way back down to that last down close candle, that's, to me, it's not bullish. Appreciate you, Fly Fisher. So it looks like it may leave this open, but I'm electing to just wait. I'm electing to wait for that because it seems to me higher probability to wait for it. Yes, we moved off of this fair value gap, but if we dropped lower in here, this would be inside of a discount, inside of that 15-minute, inside of the 5-minute fair value gap. Just seems a little bit higher probability to me. I'd rather elect to wait for that. If it moves away from that, then it is what it is. You have to draw a line in the sand when it comes to trading in your model. You can't just move. You can't have loose rules. You can't just loosely, adapt and just, well, one day I'm going to do this and the other day I'm going to do that. You can't do that. You have to have a firm line drawn in the sand and saying, I'm going to stand right here. And if I don't get my entry, then it is what it is. So, there used to be a guy on Twitter, I mean, he's still pretty active, or was. His name was Stock God. He traded ICT concepts for a while. He really, really helped me back in like 2021 with psychology, and he always had this phrase is, it's my entry or nothing. And I really loved that because it kind of ingrained into my mind that, I'm not going to be chasing everything. It's my entry or it's nothing. I'm not going to just chase everything. I'm going to stand my ground, and if it doesn't come to me, then it is what it is. I follow my rules and I follow my discipline. Discipline is a bitch sometimes. Excuse my language, but it is. At times, it's going to work in your favor and you're happy that you did it, and it, you're happy you followed it, and then at times, you're going to miss entries and moves because your rules and discipline were in place, and you're going to be like, man, that sucks, but it's there to protect you. And over a long period of time, if you continue to follow it, and you continue to be, proactive with it, then it's going to pay you out. And you're only going to learn that through time and experience and understanding that. And it takes a lot of pain. I've been through so much pain with these concepts. I mean, just trading in general. You're going to go through a lot of losses, a lot of missed moves. You're going to go through a lot. So you're somebody who's developing. It's normal. It's a normal thing to miss moves, take a lot of losses. You just have to keep moving forward, and eventually you're going to get to the point where you can find that consistent profitability. Possibly Tanish. Could be why. You could see it's starting. Why I'm starting to wake up a little bit here. So it may just be lagging behind the other two. It's the reason why I've been semi-hesitant to really push longs today. It's a Monday. No economic news driver events with CPI second week of January. So if you see me not pushing a button or being very, I guess, active, is because I'm aware of the time, the seasonality, etc., etc. You can see in here, even if I entered off of this, it's not something that I would really like to be a part of. Of course, we all like low resistance liquidity runs where you just get that fast, snappy move away from your area of interest. Particularly, I want to put myself in that place. You can't always pick it, but if I can, then obviously that's what I'm going to pick. So what I'm determining here, at least thinking, is I can see that we've taken out buy side liquidity. So if we return to this fair value gap, does that lend support for us to move higher into the higher targets we have labeled? On the flip side, is this a turtle soup above the buy side liquidity? And how am I going to determine that? Well, it's really with time. I'm going to have to see with a few things. So as an analyst, I talk about being a detective or being a judge, and I'm looking at both sides of the argument, and I'm trying to make a case for one side or the other, and I'm trying to gather evidence. And typically, in most trades, you should be clearly one-sided. The argument should be clearly one-sided. The other side of the argument shouldn't have as much evidence towards it. So when I'm looking at the bearish argument or side of it, I don't really see that. The only thing I really see is the bearish S&T and Dow not in sync. As far as bullish, we have dollar moving lower. We have ES with relative equal highs above it. If Dow starts moving in sync with it, then I'd be fairly confident that we should react off of that 5-minute fair value gap, and we should react off of the 15-minute as well. That's, what's going through my mind currently. Do I use standard deviations by Dexter? Not really, no. This may burst a lot of people's bubbles, but I think standard deviations are overrated. Because your draw on liquidity is the most important. Just because a standard deviation says it's going to go somewhere doesn't mean it's going to do that. It may line up perfectly with the target, and obviously the algorithm is beautiful, but to me, I'd rather just look at a draw on liquidity over a standard deviation. To me, I think it's a bunch of clutter on my chart that I don't necessarily really need. My draw on liquidity already tells me where price is going. Danny. Yeah. I'm gonna keep my mouth shut. Like, let's say for instance, I'm eating a banana, excuse me, but let's say for instance, right, like this draw on liquidity that I had here pre-market, I could see a standard deviation, like an inverse standard deviation from basically this breaker, from that high to that low. Like, yeah, it lines up with negative 1.5 standard deviations, and even -2. Like, yeah, it lines up beautifully, but I already knew that. I already knew where price was going. So I don't really need a standard deviation to tell me where it's going to go, if that makes sense. Looks like YM's waking up, which is good. I still would prefer, but we may not get it. We actually may rip off of this 1 minute from here. But again, I'm drawing that line in the sand. Yeah, I mean, exactly. It is. I mean, it's just a good confluence, but it's not a holy grail. It's like a new week opening gap or a new day opening gap. I mean, they're great, but it's just confluence. Am I friends with him? No, I've never had the pleasure of talking to him. I think we follow each other on Twitter. To be honest, I'm really selective on the people I follow and I talk to on Twitter. I've been on there for a long time inside of this community before it really blew up. So I really only talk to the people that I first kind of met. Thoughts on Romeo? Again, I'm not going to go into any Twitter beef. I'm not going to talk negative about anybody or really get into that. Drama is so overrated. I just want to trade, man. That's all I want to do. You can see here reacted off of that 1 minute, expanding higher. So again, I drew the line in the sand, and ultimately, it was just discipline. It was something that I was exercising. I was exercising to look for this. Do I still see that as a valid potential? We'll have to see with time here. I mean, about 30 minutes left in the silver bullet. If I don't find something in the first 30 minutes of the silver bullet, I will look for the macro that is towards the end of the silver bullet, which is 9:50 my time. So from here to 10:10. So I'll look for that kind of 20-minute window. If I don't find anything typically, then I'll look for that and see if there's anything valid. He's talking about Dexter, Danny. I am located in the United States. So we have a 30-minute here as well. 1 hour. Again, I'm just trying to see, trying to visualize the rest of the day and where this could potentially look like. You can see that Dow is really moving in sync now, which is good. ES is moving towards its relative equal highs. The terminus on that would be 47.66. So I'm just going to be curious with it. I'm going to look at ES real quick, just kind of for the sake of the stream. Well, let's look at ES real quick. Have to move a few things around. The high here and the high there on ES. You can see on the left side of the chart there's an old SIBI. We drop down into that as an inversion. 5-minute time frame. Let's see here. So we didn't close above it until this candle here. So that wouldn't have been an inversion. Let's see, fair value gap there. Dipped into it a couple times and expanded away from it. So I'd be looking at 47.60, then 47.66. I'm going to move back to NQ. Just take a note at dollar index as well. Reached up into the volume bounce, SIBI there, expanded away from it. 4 hour, SIBI, bear shorter block. 1 hour, SIBI there, expanded away from it. Let me tag the buy side liquidity pool there. Yeah, it did, Denny. So look at Dow now. Dow's really moving in sync. It was just a little bit delayed, which is a good sign. Dove, Gordon. Yeah, I mean, I'm not going to give my location away, to be honest with you. I think somebody asked about quarter theory. I've actually tested that on Forex. It's actually pretty clean, I'm not going to lie. Like the, I forgot what he calls it, but the lower time frame kind of quarter theory, I guess. It's pretty good. I don't know how well it works on futures. And if you see anything anybody's promoting, just go into the charts and look at it yourself. That's the best way to figure it out. Does it work? You can clearly see. What do you think was better, 40.66 as opposed to 47.2? Well, whatever the lower one was, the 47.60. So my main focus now, as we're nearing kind of the end of the silver bullet, is I'm going to be looking at that macro and just seeing what really happens. So if you look at the silver bullet in general and looking at kind of what played out, I mean, this could have been a little short-term scalp in here. I talked about the things that would have made this a little bit less high probability to take. I don't have a very clear draw on liquidity that's above us. So in terms of like risk reward, how much, juice can I get out of the squeeze, it just wasn't enough for me. So I'd rather elect to not take that. From here, take this away. If we dropped into this fair value gap, I'm going to have to see with time because it depends on what time we reach into that. What's the difference between NQH? Well, I'm using the continuous contract to chart. I know ICT says not to do it. It's better for me to teach when I'm looking at higher time frames because there's some things on the actual contract that's not shown. So if I'm teaching, it's better for me to do that. In general, I've never had an issue with the continuous contract. It's always printed the exact same feed, but obviously you can't trade it. You need to be trading the March 2024 contract. What's your best core memory moment from the charter days? I don't think there was any. As much as everybody, wants to be a charter member, I mean, that was a grueling learning experience. If you think his videos are long, I mean, in charters, there was, 4 or 5 hour videos that you would have to sit through, and they're every single day. So you had to put yourself through a lot of work. And I was putting ICT on, 2x speed and trying to take as many notes as possible. Like people that join or just found these concepts in 2022 and 23, you've had it the easiest he's ever made it. He's gotten so much better as a mentor, or he did. He used to be very, very longer-winded and very not straight to the point with things. So we had to do a lot of work to figure a lot of things out. For those of you who don't know, I guess, I'm sitting here. What's funny in those earlier days with ICT is he didn't even want any of us posting like charts on Twitter of these concepts. Like if you've been here for a long time, it's such a fascinating thing that's happened with this community because it used to be very tight knit, and he didn't want a lot of things out there, not even charts with annotations on it. And now it's everywhere. So it's funny how things have changed. So ideally today was probably the open. The first 30 minutes was probably the best opportunity. If you're looking at everything, it was position yourself into the market pre-open, and then I would say there was two kind of entries. This one here, and even this one slightly. But again, if I'm following my rules and my discipline, it wasn't inside of it. So can you make adjustments and obviously journal that and see where you could have done better? Of course. No, candle counting does not exist. That is not a thing. I'm sure somebody will come up with another new enigma, whatever theory here shortly on Twitter, so beware. Yes, Todd, I actually believe going through 22 first, going through Silver Bullet, going through One Trading Step for Life, those will suit you far better than going through core content. You'll be lost with core content. You see here, bull, shorter, black, projected off of that. The issue I'm having is I just don't know how far we're going to expand today. I don't have a lot of upside targets besides these relative equal highs up here and kind of this old high that we just reached above. So now that we've moved away from this 5-minute, this 15-minute, I'm going to elect to believe we're going to leave that open and just keep expanding towards buy side liquidity pool. And CES is almost at, I think it's 40, 70, 60. Yeah, most definitely, bro. I mean, definitely go through the core content, but if you're just learning these concepts, I think it's gonna be a lot. I mean, that's how I learned, and I was completely lost. I had no idea. I didn't know what he was saying. I had gibberish. So if you look at the daily, reached into this discount fair value gap that I talked about, optimal trade entry, and then we moved away from it. So let's see here. About 7 minutes until that macro. In general, I mean, it's not always going to work. The macro is not an everyday thing. I mean, it is in terms of it, but it's never 100% that, right on that time zone. it's gonna start moving or will move. Yeah, exactly, Danny. I mean, it was like going through a maze with no flashlight and pitch dark. I just had to feel my way around. So why would I not be pushing for longs? Because we're inside of a new premium. We've moved above old highs. So anytime you do that, it can allow price to move back into a discount, a parent discount. So I'm looking at least a 15-minute structure. We have these two fair value gaps. So I'm not trying to kind of push a top here. I'd rather elect it to move into that discount fair value gap or bullish PD rate. So if you see me in here and what I'm doing, I mean, I really wouldn't want to be a part of this move. To me, it just seems low probability. I'd rather wait for that discount to be met or some type of bigger retracement. It looks like my stream has been healthy the entire time. So I guess the router that I bought has actually made a difference, which is good. Yeah, the only thing I'd be looking for is this buy side liquidity pool there, kind of a reclaimed fair value gap. And then we have higher civvies all up here, which I don't think we're going to reach into today. So only thing I'm going to do is I'm going to wait and see, can we get a retracement? If we don't, then I'm calling it a day, and it is what it is. It's a Monday. I'm in no rush to do anything. I know for a newer student, when you see moves like this and you see things happening, it can feel like you're missing out on a lot, and you feel like you should be doing more. You don't need to. You'll learn that less is so much more. And even like me, um, if I can just pick days where I don't want to be in front of the charts because I know I'll be tempted, then I just don't even get on the charts. Like, if I know a certain day of the week is going to be lower probability, then I'm just not going to tempt myself by even being on the charts. Of course, with live streams, I'm still going to be here, which I think is more time rolls on, you're more experienced and you can tame yourself. But as a newer student, it's harder to contain yourself. It's harder to contain your emotions. I got a router that connects to my modem. No, reclaimed is different than an inversion. Example. Like this here. You see how we use this SIBI, drop price off lower, extend it out to your right. We came up into it again and again, then we sold off. So reclaimed is utilizing a PD array, multiple times. An inversion is when you close above it or beneath it and you utilize it on the other side. So like here, this once was a SIBI. We traded above it, closed above it. If price came back down into that inversion and utilized that as support to go higher, then obviously that's an inversion level. And you flip it. Right? So There's a lot of misinformation on Twitter and on YouTube, and people teaching things completely incorrectly. Um, and I don't blame them. They may, obviously mean well and have good intentions, but um, if you haven't done the work and you haven't done the studies, then obviously you shouldn't be out here teaching and guiding people, because it's not good. Thank you, Danny. I appreciate you, brother. If we just keep expanding here today, I don't care. It is what it is. ES reached above its buy-side liquidity pool as well. I had to be honest, I did not expect this much movement today on a Monday with no economic news driver events. So a little bit surprised by that, but and this is where I think setting low targets and low expectations for yourself. Like let's say I think the easiest is probably ES. Let's say your goal in a week is to capture 10 handles. Do you feel a lot of fear missing a bunch of moves? I personally don't, because all I know is I have such low targets that I could easily capture 10 handles, and all you have to do is just wait for a high probability setup that you personally like. And when you see these type of moves that are unfolding, and it's not really your style and not really your entries, you don't feel fear, you don't feel any type of emotions, you're not angry, because I don't have to capture 50 handles in a week. You're not setting this large unrealistic expectation of yourself. Like just shooting for 5 to 10 handles in a week is a great start. It's a great base, even for somebody who's professional. I mean, if you do one contract on ES for 5 handles a week, that's $250 a week. I mean, that's $1,000 in a month. I mean, who could use an extra $1,000 a month? I know, even me, I could. So when you look at things, don't look at through the lens of I need to make thousands and thousands of dollars. I need to, replace my salary, or I need to replace my income right away. Just start with little by little, and as you grow and you build yourself, then obviously you can shoot for a little bit higher targets and expectations, but you can't just shoot for 30 to 40 to 50 handles in a week when you haven't even been consistent with 5. So you need to build that base up first and then start shooting for more. What what to do after a large expansion day? Is it seek and destroy after? I mean, not necessarily, not always, no. Sometimes it can. Just depends on the profile. A lot of these things that like are rules are interchangeable depending on, every day is unique. Every price feed that day is unique in and of itself. So you have to be the analyst, and you have to be the person determining, what is going to happen. Because you could have a large expansion day, that doesn't automatically mean it's going to be consolidation and seek and destroy the next day. It could very well just expand again. If there's higher time frame confluence where it needs to expand higher into draw on liquidity. I mean, there's numerous factors, and that's where you as the analyst, you come in and you determine that. So um, a lot of these concepts, it seems like it's set in stone, and it's this or that. It's never this or that. It's always determining and weighing options in real time. All right, let's see the standard deviation here. What'd you say, 4? Yeah. But again, I mean, that's where I'm really not trying to spread hate. It's all jokes with standard deviations. But um, I, I would see I would see the SIBI before I saw the -4 standard deviation. I mean, I see that already without the standard deviation being there. So um, I don't I don't know if you're here, Kyle, when I talked about standard deviations. To me, I see the draw on liquidity before I see the standard deviation, so that's not very useful to me. I mean, it's still a good eye, though. I know what you mean. In terms of just the next kind of draws on liquidity here on the 1 hour, relative equal highs there, fair value gap that's open, inefficiency there, and then the one above it. So this entire week, I'll be looking for at least these higher premium civvies. And to note as well, Monday setting the low of the week is not my typical best profile I like. Doesn't mean it can't happen. I typically like, if you're looking at weekly profiles, I like the low of the week forming on a Tuesday or a Wednesday, or even the high of the week, even like, same thing, sometimes even a Thursday. Monday is just, it just doesn't seem, sometimes that may be a false low or a false high being formed, which, I mean, very well this could be the low of the week that was formed on a Monday. And that's because we were inside of that daily time frame discount and inside of that daily time frame fair value gap as well. So yeah, Bruno. I'm not a swing trader. I'm not going to hold positions for that long. If that's your style, then of course. I find it more optimal to be an intraday scalp, find my setups, get in and out, and that's that. I can still utilize the swing approach, just understanding where I'm at on those higher time frames. So we're inside of that macro. We're nearing the end of the silver bullet window. It really hasn't been anything extremely fruitful. Like I mentioned, in hindsight, this could have been the entry, but I've already discussed why I didn't want to take that. And this is where backtesting and even hindsight photos and entries, all of those are, it's easy to say a lot of these things in hindsight, but in real time, there's a lot of different factors and things that you're weighing upon in decision making. So everything's different in real time. Everything. Thank you, David. Happy 2024 to you as well. I plan on going live for the most part every day. If I don't feel well or I don't want to be on the charts live, then obviously I won't. But see how long we'll keep this going for. And I mean, to be truthfully honest too, I'm trying to get used to the idea of taking entries live in front of people and trying to discuss price live. I mean, it's a lot different than just sitting by yourself in silence. And I mean, there is a level of emotions that are added to it. I'm not going to sit here and lie. I'm quite comfortable with doing it. I've been teaching for a long period of time, I guess you could say. So I'm comfortable with it, but there still is that level of emotions that are added to it. Trying to be perfect, not trying to take a loss, those type of things. I'm aware of it. So yeah, I mean, accountability too. I do like being live in front of people because it is accountability partner or factor, because you really can't be on stream, going crazy. Yeah, you really can't. You can't just be firing off trades. Not like I'm doing that in private, but I mean, whatever you do in private is gonna come out publicly, anyways. So. As we near the end here, I mean, this is it. So, this is where discipline and rules are very, very crucial and key. So, if you're trading the silver bullet, you're trading that 1 hour of time. You keep yourself on a leash to that 1 hour of time. As soon as you reach that, you're off the charts. You don't stay on the charts any longer. You don't push yourself anymore. You're done. And you could sit here and be like, after the silver bullet, we had all these great entries, and why am I trading the silver bullet? This is stupid. That's probably you don't have enough data to support the idea that, what, I'm content with just the silver bullet. I'm content with only an hour of time because I can see that there's enough profits to be made. Today in particular, really, in my eyes, there wasn't enough in the silver bullet. Basically just this little run in here. I'm okay with missing it. I know that there's going to be another silver bullet tomorrow, and the next day, and the next day, and the next day, and the next week, month, year. So to me, having that long-term perspective and not getting so laser focused on, man, only today, if you get into that mindset of you're so laser focused on, this one trade, this one setup, this one day, that's where you're going to start invoking a lot of emotions because you're so tunnel visioned on one thing. Um, Broaden your horizon or have things that remind you that you need to look at the long-term perspective, because I have probably 20 note cards. They're all either on my desk or on my monitors that remind me of certain key things that trigger me, um, that I'll read out to myself if I'm feeling some type of emotions. I mean, Hassan, that's really what that's what these lives are for. I can't make a singular video over concepts or over. I can't do that. I think a lot of those people that make these singular videos over a concept or over, you know, certain things, it's just not enough. It may help you see it and may help you learn it, but the only way you're going to learn it is going every single day, looking at price action, looking at how the market operates, and learning through that lens. And it sucks because it's a lot of work. It's hard. You don't want to sit down every single day and look at these charts and learn it. But that's the only way you can learn this stuff. You can't learn these concepts through one video. There's no shortcut. Um, I know it sounds brutal or harsh, but it means the truth. If you want to be profitable, you want to be a professional in this, you want to be, one of the greatest to ever do it, you have to be willing to sit through the fire through years and years of doing this. There's not one video or one thing that's gonna help you learn this. That's just the cold truth. As we move, this is the end of the silver bullet hour, right? So, looking at what happened and reviewing it, pre-market, position yourself in that. I did annotate everything that was going to happen. I annotated where the draw on liquidity, where price should go to. To kind of make note, I've had this as well in my early years, is like I'll have a draw on liquidity correct, but my entry pattern never formed, and I'm super upset with myself and I'm mad. Again, this is long. The only thing that takes me out of being really upset or any type of emotion, it immediately, as soon as I put myself into the lens of long-term perspective, think 6 months, think a year. We have the whole year. When you take that perspective, it immediately reduces all those emotions because you're like, you know what, man, I have so much more time. And if you know, which I obviously know through years, these concepts repeat every single day, every single minute of the market. So I'm never fearful because I know that these things repeat all the time, and we have plenty of time. There's no rush. I don't need to push myself or be upset. Um, all of these things are what you need to be telling yourself during the live market, because it's so easy to get caught up in all of this. It's very easy. Exactly, Nick. Much nicer than another life. Hey, I appreciate that. I'm gonna do my best to do that the rest of the year. To kind of leave all of you off with the rest of the kind of session or the day, right? Keep an eye on YM. We actually have, I'll do it just so you guys can see it. We have this bullish breaker here. So we have a low, a high, a lower low, then a higher high. So this last up close candle in confluence with that fair value gap there is kind of where I'd want Dow to react off of it. If it's going to continue bullish and it's going to be in sync with ES and Q, that's kind of the last point of interest. That's really where I'd need price to break away from. I don't trade Dow because I just find it very like a snail. It's very, very sloppy. You can see the SMT. It's the reason why I'm really hesitant on pushing these longs up in this high premium, because look at where Dow is compared to ES and Q. All these relative equal highs that ES and NQ tagged, which were here, look at where it's in comparison with Dow. It's nowhere near it. So that is a bearish SMT. It's a decoupled market. Does it mean that it won't do it? No, but it's not the greatest sign. I don't love it. So you can see here, if we can expand away from that and it starts to get in sync, then these will start to move even higher, which I would find slightly surprising today. And that's going to be it for today, to be honest with you guys. I don't want to push this stream any bit longer. I hope you guys enjoyed. Make sure to give me a follow on Twitter. I'll be live tomorrow as well. I'll be doing a daily log as well every single day on YouTube. So make sure to subscribe to the YouTube. Turn on notifications. With that being said, good luck and good trading, everybody.